Taking a look at the S&P 500 index futures, we're up 5 points. Yesterday's high 2106.50. Crude found support at 45 yesterday, now trying to get a 46 handle. Gold and silver giving back some of yesterday's, actually 2 days of gains. Dennis, how you doing this morning?
Looking here, S&P, little rally here. Isn't it shocking, this S&Ps? You get a report like Facebook last night. Facebook falls, and Facebook has rallied off of the lows, but we're still down 6 points here on Facebook. You get, another a number of other reports here as well, like First Solar and some smaller companies, and we rally here on the S&Ps. Why do you think we're up here, Joel?
Just because it's just buy the dip mentality here. We've had some pretty hard down days. The question is, though, Dennis, this is now. This is the open, right? We're up 5.5 now. Who knows where we're going to end up by the end of the day?
Yeah, and you know what? The consideration, and we were talking about this on the pre-market show, was we've got the election here. We have 4 trading sessions before we obviously know the results of who is going to be the next president of the United States. The question is, if you're a money manager, and I'm just, playing out scenario analysis here, and I'm talking about the next 4 days. If you're a money manager and you're seeing Trump jumping up in these polls here, and you're sitting on all these gains, especially if you're in a stock like Facebook, and that's maybe why, we're selling off here, even on a pretty good report from Facebook, which we'll get to in a second. But we're just talking overall market here. And you're looking, at a lot of gains over the course of the last 7 years. And even, over the course in a lot of different stocks, you're looking at some gains. I know we're at 2% off the highs, but really when you put it in perspective on the S&Ps, we're really not that far off the highs. Wouldn't you be booking some gains? Because if Trump gets in, there is a lot of question marks.
There's question marks on both sides. One thing that we were talking about on the pre-market show was, okay, so the conventional wisdom here is that if Hillary takes the White House, right, it is going to be bad for the drug stocks, right? But if Trump comes in, it's good. So if everything is so close, then why are they just kicking the daylights out of the IBB? I think we've been down 17 out of 20 sessions. I think down 21 out of 24, and I think those up days were just minor up days as well.
So you're saying the IBB indicator says that Hillary is a lock for
That
president.
is
Is that what you're
correct.
saying?
Yes. That's my IBB indicator.
I think the IBB doesn't want Trump either. I think the IBB doesn't want Trump or Clinton. That's
I
why
know you said
IBB
that
is in
too.
trouble. They don't want either. So that's why they just sells off no matter what. The unknowns with Trump, we don't know what's going to happen here if he gets in. I mean, and I'm, not either obviously able to vote here, but if I was voting, I would not be voting for Trump. And that's just my own opinion here because I don't think he has the experience to handle the job. And we know Hillary has the experience. She's probably the best person for the job. Her health is in question. There's a few other question marks around her, but I do believe that the market wants to see Hillary in. And if Hillary does get in after Tuesday, I think you're going to see a nice pop. But if Trump gets in, and I think it's still a big question mark here because I don't think Hillary is a lock anymore. Trump wins. This market, I think they're going to kill it.
Very well, but we were talking about some value stocks, Dennis. Man, you were doing a little bit of combing the ditches here. 4 issues that we may want to add to our long-term portfolios, and you mentioned an interesting one, Mylan Labs. Tell me the fundamental.
Well, yeah, and here I'm just looking, and if you're looking for value and long-term value, not short-term, we don't know what happens. Hillary gets in, we don't know what's going to be happening with biotechs. Everybody hates the drug stocks right now. They have been one of the most hated sectors here over the course really of the last year, but even in the last 2-3 months. I mean, just look at a chart of Pfizer. It's over $37. It's back down here at 30. I own Pfizer in my investment portfolio. Merck has come off significantly. I own Merck in my investment portfolio. Lilly has come down a lot, $83 to $72. It's starting to get more attractive here, but Lilly was a little more expensive. That's why I sold it up in the 80s. I would love it to get in the mid 60s, and I would probably rebuy it in my investment portfolio. But I'm looking at a lot of other ones that I don't have in my investment portfolio. And you wonder about Mylan Labs. So MYL, and it is trading up here already this morning, but it's finding some support down here at 36. The stock from, a fundamental perspective is fairly cheap. Like you look at the earnings and the estimates for next year, anywhere ranging from like $4.85 up to $6. So, you can probably say it's probably going to make, and there's some unknowns, I mean, but for the most part, we don't, like, obviously the unknown being, if they put pricing caps and if we get Hillary and she obviously has maybe a hate on for Milan Labs, but MYL is cheap from a relative perspective of where it has traded in the past. Trading at a PE multiple of between 6 and 7. The earnings come down, obviously that multiple is going to go up. But if the earnings just stay stable, the stock is just cheap. Same thing with Gilead. And I already own Gilead. I was early on Gilead. I bought it up at 80. It's down here at 72. So I'm obviously underwater in that. But again, if you have a time horizon, I'm not talking about trading here. I'm talking about investing. If you have a time horizon of 5 to 10 years, look at the stuff going in your favor. First of all, aging population. Demographics here say that we're going to need more drugs in the future. Everybody is getting older here. Drug stocks aren't going away. You're going to need drugs. And these things are trading for multiples very, very cheap. Like you look at food stocks and trading for multiples of like 18 to 20. A lot of these drug stocks that we're talking about, like Gilead's and Mylan, and there's a lot of other ones out there, are trading for multiples of 6 or 7. So you're going to pay 3 times more money for a food stock over a drug stock? I think that is crazy. So that's why, I've definitely overweight drugs in my portfolio. I'm going to continue to get more overweight here, I think. And I think it's a really good long-term buying opportunity. Short-term, a lot of unknowns. They might get cheaper. Cheap stocks tend to get cheaper in the short term. But in the long term, I've always done well being a contrarian investor. And I do believe there is an opportunity here that we've not seen in a long time in the drug stocks.
Just taking a look here at Pfizer, yeah, great support. Well, we got Gilead up here. Great support at the $36 area. The one thing I mentioned to you was the CMG factor, but you seem to, don't think, there's other things going in its favor. It's not quite as bad.
What do you mean in the CMG factor for Pfizer?
Negative perception.
Why does Pfizer have a negative perception?
Not Pfizer, Mylan.
Oh, yeah, but I don't know if that matters as much with drug stocks. You're going to need the drugs, right? You need an EpiPen, you need an EpiPen. So it's not like I'm not going to take an EpiPen because I don't like the company. I mean, I need the EpiPen. So it's a little bit different with
Dennis,
perception
I need
with
the
drug
EpiPen.
stocks.
Yeah.
I need the EpiPen.
Are you an EpiPen user?
Yeah.
Oh, so there you go.
Yeah.
So, you're giving my money whether whether you want to or not.
Don't
need
tell,
the EpiPen.
Don't tell Lisa.
Great point from Dr. J here, though. He was asking me a question actually. Just he said, I heard you, or you asked me if I was in Pfizer long term, and this is a good example of contrarian investing. Yes, I've had Pfizer in my investment portfolio. I bought it back during the financial crisis. So go out to the monthlies and take a look. My average cost base on Pfizer, I think, is $13. And why? You look at that. How do you get that? It's by buying companies when everybody hates them. Everybody hated Pfizer. Got down. I was even probably down on it. I think it's 14. It might be 14 or $15. I'd have to look at my portfolio, just to see. But I know it's in the mid-teens that I bought the thing. And obviously, I didn't get the exact bottom. I think it got down to 12, or I don't know how low we got, $11 during the financial crisis. But I was buying on the way down because I thought, hey, first of all, drugs, aren't going away. Pfizer's the biggest drug maker. I don't think this company's going out of business. It used to be a $50 stock if we go back to the year 2000 here. It's now trading for 11. Or 13 or 14 when I was making the investment decision. I was like, I'm going to throw that in my long-term invest portfolio and forget about it. And here I am 6 years later. I've got a ton of dividends off of it. And it's still, I'm sitting up, about 200% on the investment. So you can look on, yeah, it's been a rough 6 months for Pfizer. It's went from 37 to 30. Some people say, why didn't you sell at 36 or 37? Well, hindsight's 20/20. But that being said, too, is, I've always, my invest portfolio, I make more money by holding through those pullbacks because, you can't get the timing always right. And a lot of times you'll sell it and then it'll end up going higher and higher and higher and you never get a chance to get back in. So long-term investing is still, one of my core strategies, obviously. Day trading is my day job, but the money you make day trading, you have to do something with it. So that's why I have a long-term investment portfolio. And that's why we like to talk long-term investing as well, because there are a lot of listeners, the time horizon isn't seconds or minutes or hours or days. It's maybe months, weeks, months, and years. So, if your time horizon is years, I think there's a fabulous opportunity in the drug stocks here right now. Just look through, go do a little bit of fundy analysis, look at the multiples and, pick on a few and say, hey, maybe, these are good companies going forward. Personally, I like Gilead. I love Gilead down here. And I'm thinking about Mylan Labs as well. I know it's obviously perception. There's a lot of things going on there. Maybe it gets attacked by Hillary if she gets in, but the stock is cheap.
Jimmy A saying, Dennis, you're just riding the benefit of a big bull market.
Sure. But you know what? You could say that over the last 50 years. You could say that about Warren Buffett. Maybe he's been just riding the benefit of a big bull market for 50 years. Do you think stocks are going down over the next 50 years? Maybe, bull markets aren't forever. Maybe we're going to go into this eternal bear market. But I've always, just been a buyer of pullbacks in the overall market or significant pullbacks. And those opportunities like the financial crisis don't present themselves. But I think, we're on a situation here now on some of these drug stocks where I see a lot of value, not as much value as was during the financial crisis because people were throwing stuff out thinking every company is going bankrupt. But, I think, when stocks are trading down to multiples, historical lows in their PE multiples, that is your longer term investment opportunity. When everybody hates a stock, that's when I start to get interested from an investment standpoint. Definitely not from a trading standpoint. Don't jump in here, and say, oh, Dennis liked Gilead at 72 and it's at 68. Dennis is an idiot, next week, because I'm telling you, I don't know where this thing's going. The momentum is definitely on the side for it to go lower here in the short term. There's a lot of unknowns. But look back at the stock in 5 years, I think it's a lot higher than $72.
Also, you're neglecting to mention dividends. You got paid. You're getting paid on the Pfizer. Not a huge
Love
dividend,
it.
but yeah, what is 2.5,
Well,
3%?
well, well, think about this though, Joel, and this is a great point too. It's 3.89% the dividend. That's on $30. I'm in this thing at 14. On my initial capital, I'm getting 8-9% a year on my money on that initial capital. Because if you think about that, because I'm in from $14.
Yep.
So yeah, on my current capital, what the thing's value. But if I look at my cost base on this, it's paying me like 9% on it now. So that's dividend growth right there. And buying stocks when they're throwing them all out. One of the best ones that I did was Eli Lilly when I bought it back at $30 and I had a dividend of 6%. Why'd I sell it up at 85? Because it came back and the dividend got down to 2.5%. It felt overdone. So you do have to analyze. I'm one that holds stocks for a long, long time, but not forever. When the valuation just seems to get too high, that's when I'm gonna turn around and start dumping them. But this is more of a trading show, not an investing show. We're talking investing here for 10 minutes.
That's all right,
You know,
Dennis. You know what? Because I think we have a lot of people in the chat. Just chime in here. Is this kind of stuff you're interested in hear about more? Longer term perspectives or not? So just chime in here while we go and get our first guest. And our first guest is a good one, Michael Hewson, Chief Market Analyst at CMC Markets. But folks, let us know if you like this fundamental talk.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep. I'm your co-host, Joel Elcano, with Dennis Dick and Spencer Israel, and we have Michael Hewson on the line, Chief Market Analyst at CMC Markets, calling from across the pond. Michael, how you doing today?
Good morning, chaps. Good morning, New York, and all you fellow traders.
Okay. All right. So the reason I wanted to bring you on today is, there was a little situation you guys had there with the Brexit. I want to get an update on that from you, and then also, the polls. We're seeing all the polls. It's this close election. This, that, and the other thing. Everyone has their different perception. Just give us a perception over there from someone across the pond.
On what? On our problems over here, or in your potential problems over there? It's quite a big subject. I mean, I'll start with the Brexit ruling this morning. So I'll give you a flavour of what that's about. Ultimately, the High Court here in the United Kingdom has ruled that our Prime Minister Theresa May does not have the authority to unilateral trigger Article 50, which would basically kick off the process whereby the United Kingdom would negotiate its withdrawal from the European Union. It has to go through a parliamentary process. Now, what that judgment has basically given is it's given the pound a boost, because ultimately it makes a hard Brexit or a complete unilateral sharp break with the EU that much less likely. And ultimately that is perceived to be probably the best outcome over the course of the next 2 years. And the pound's currently looking to test 125, potentially 126, and that gap that we saw in the aftermath of the flash crash in October, where basically it dropped very sharply through 126 and went all the way down to 120. So I think there's scope for the pound to fill that gap between 125 and 126, on the back of the fact that ultimately it's going to make the departure process that much more tricky and much more of a process rather than a short, sharp shock. Now, on the flip side of that, obviously, you've got the US dollar part of the equation and the potential that you could get a very uncertain outcome from next week's presidential election. And for my part, I have to say, having sat through the Brexit referendum in June, I think markets are terrified of an outcome which they don't expect. They got caught offside in June and they don't want to get caught offside again. And that's really why you're seeing the sell-off that we're currently seeing in equity markets and the sell-off in the US dollar, because ultimately markets are afraid of a Trumpectomy, if you like, on the US economy, a shock that could be brought about by Donald Trump unexpectedly gaining the US presidency. Or even worse than that, you getting Hillary Clinton on a very close outcome, but under investigation by the FBI, which means that potentially she could be a lame duck president.
Yeah, I don't know if either outcome's going to be good. The overall markets here, it's kind of scary. And this is just, something that Joel has actually brought up a couple of times here and actually brought up yesterday about polling. And, over there with the Brexit polls, it was, like 95% that they were going to remain. And then, they ended up, voting it out. Is there any, because usually the polls are pretty good. Is there any, real reason you think that was behind that? Why, that actually flipped right at the last minute?
Yes, well, actually, I don't think there was a flip. I think people were looking at the wrong thing. They were looking at the money flow, and the flow of smart money, and I use smart in inverted commas, basically was predicated on a Remain vote. So all the bulk of the funds, the cash flow, was going on a Remain outcome, but an awful lot of the small bets, and there were a lot more small bets than there were actual large bets. So in terms of, let's say, for example, you have 10 people betting on an outcome with very, very large amounts, and then you have 90 people betting on, a dollar here, a dollar there, on a leave outcome. What you had is, on a percentage terms, a lot more people voted, or not voted, but bet on a leave outcome than voted for a Remain outcome, but most of the money went on Remain, if that makes sense. And I think there's a similar sort of dynamic taking place here. You're getting large amounts of money getting put on Hillary Clinton, but lots of people are having small side bets on Trump. And I don't think the polling is reflecting that. And that's what happened in the UK, United Kingdom, in June. And I think there's a worry the same thing is happening with the US presidential election. A lot of people are having side bets on Trump, and a lot of the big money is going on Clinton.
Coming out of the chat here, we had a question about the market. When the market goes down, right, and then it popped off to Brexit. If Brexit doesn't happen, well, what kind of effect do you think it will have on the U.S. market?
And the UK market.
And the UK market,
Yeah.
well, actually, I think it could have a perversely negative effect on the UK market because an awful lot of the gains that we saw in the wake of the Brexit vote, the Leave vote, have been predicated on a lower pound. Now, if we get, if Article 50 or Brexit is thwarted in any way, shape or form, that could actually see the pound go up and acts as a drag on the FTSE 100 because an awful lot of UK companies get their earnings priced in dollars. So ultimately, a higher pound actually eats into those profits. And I think you saw that reflected in the wake of the Leave vote because ultimately what happened was the FTSE 100 went back to a record high. We've now since come off that. The pound has stabilised and does appear to be edging higher, and that's pushing the FTSE 100 lower. So, if Brexit doesn't happen, and we won't know that for certain for at least another 6 months, there is an appeal taking place on the 7th of December. Ultimately, if it goes to a parliamentary vote, there is a chance that MPs may vote it down or make it very, very difficult for Theresa May to push it through, ultimately then diluting the effects of Brexit. So in essence, that could potentially have a negative effect. Certainly in terms of the UK economy, we're not seeing any negative effects apart from the fact that I think further down the line we could see a significant return of inflationary pressures, which is ultimately what the Bank of England has been trying to do for the past 10 years and failing abysmally. They may well finally succeed in that regard. As for the US market, I'm actually not certain what outcome would be long-term positive for the US markets because I think anything short of unequivocal Clinton victory is likely to be negative for US markets. And even if you do get a Clinton victory, I think the effect of it could well be short-lived because ultimately the Fed will raise rates in December. Then really it'll be a case of what's the rate hike cycle going forward. Obviously, if we get an uncertain outcome next week, then for me that throws into doubt whether or not the Fed actually acts in December at all.
All right, we've been on the line with Michael Hewson, Chief Market Analyst at CMC Markets, giving us his perspective from across the pond. Thanks a lot, Michael. We'll talk to you again soon.
Thank you, guys.
All right, Dennis,
Thanks, Michael.
825, S&P's a buck off the high of the session. We got to get to some earnings reports.
A ton of them here. So let's jump into Facebook here. We talked and hinted on it a little bit earlier there. It was good numbers. I mean, these was a pretty good report here from Facebook, and you talked about it yesterday. It was just priced for perfection, and they were going to sell this stock off no matter what. So, it's all about, what the stocks have done prior, and it had run up. I know it sold off, yesterday just ahead of the report there, but really when you put it in perspective, we've been straight up for 3 months from 110 to over 130 here. So profit taking ensuing. They're doing that in everything. We saw it yesterday in Alibaba. I said the same thing, and this was one we obviously got right because we were looking at Alibaba. A few people in the chat, I guess, hopefully made some money off of it too because I didn't short it. I wish I would have up at 105, and it came all the way down and ended up going red. And that's just, classic profit taking as well. It got a pop back. Some people who had bought last week are underwater, and they get in. So the pops, are being sold here right now, and I think that's a lot to do with the overall market environment and not to do with Facebook. But Spencer, give us the details here on what Facebook said in their report.
Q3 adjusted EPS $1.09 versus 97-cent estimate. Sales 7.01 versus 6.92 billion, so looking good there. Q3 monthly active users 1.7 billion. Daily active users 1.18 billion. Mobile monthly active users 1.66 billion. Those are all good numbers. They also said, Zuckerberg said on the call, they're investing an additional $250 million in virtual reality content. They're testing new camera features, and the Instagram Stories, which is the new feature on Instagram now, has 100 million plus daily active users. So those are, like you said, good numbers.
Stock was wild. So it got hit, and then it rallied all the way up and went positive. So it got hit for 6-7 points right on the initial report. Then it went all the way, as everybody's saying, hey, this is still a pretty good report. It went all the way positive. And then it got hit and knocked all the way down to the 117 handle here. So obviously we've bounced from there. We're now trading 121. I don't know. I'm hands off on it at this level here because it's kind of in the middle of nowhere. There's not a lot of technicals. I mean, we had a big run up from 110 to 125 in the course of a month. I don't see a lot big levels jumping out at me here to make me think that it's just going to bottom here. It was a pretty good report, so it doesn't make me think I want to come over here and short it either. I think you get in the upper 120s. I think there's sellers all over the place from 127 up to 130, but right here it's kind of in the middle of nowhere.
Looking at the pre-market range, we got all the way down to 116.31, now trading into 121 handle. We haven't been anywhere near, 116. I'll give you you got level right now, guys. I like that. 16.89 I see as a low. Couple other areas. This is called 116.75, major support. That's just above the pre-market low of 16.31. Coming back on the upside, and this is tough too, picking some kind of resistance out of here to fill the gap. 126.28 to close 127.17. I think if I see this at 127 today or over the next few days, I might try and do a little long-term puts. And just general perspective, who asked me here, what's your opinion of the movement? And to me, when you have a stock that makes an all-time high at 133.50, then you hit 116 in the pre-market trading, or after hours, the offers are coming down. Like the people that wanted to get out at 130 right now are thinking, I'm not getting out at 130. And they might move their orders to 125. And then if they don't get down to 125 over the next couple of days, they might bring it down to 120. So the resistance is going to be sharply coming down in it. We'll just have to wait for a better technical setup on, to try and short. I can't short it here, 121. Maybe on a day trade, it's something that could work, but got to let it have a little room to breathe on the upside.
Overhead supply.
Exactly.
And that's what we have. We have a ton of it there. So
Long-winded.
great point on the psychology of why that works. Fitbit, this is a disaster. I mean, this is a disaster, not only from the earnings, but this is just an all-around disaster. Spencer, give us the numbers here. It's down 30% here in the pre-market. I'm calling, we've been calling this story over for a while, but obviously it went from 12 to 17 and had the nice bounce. But, I've, said I had one of those Fitbits. I'm one of those people that, it isn't on my wrist. It was on my wrist for a month. The heart rate monitor, I never thought worked right. I play hockey with it, and I never noticed, my heart rate getting up to the level where I thought it was. And, I was disappointed with it when I bought the thing, and that's why, I've never bought the stock. But there's, this was a fad stock. And until they come up with another product, I think, this company's in the whole world of hurting here. The fad's over. And it's down 30% here in the pre-market. Spencer, what are the details?
Yeah, actually, I'm thinking of buying a Fitbit quite soon, as a matter of fact. Q3 EPS.
I'll sell you mine.
Okay, deal.
For real.
Q3 EPS 19 cents. That was in line. Revenues of 503.8 million versus 506 estimate, so missed there. Q4 revenue guidance 725 to 750 million versus a $985 million estimate. EPS 14 to 18 cents versus a 75-cent estimate. Yeesh. And I could keep going, but that's really all you need to know.
Yeah, it's ugly. Down 30%. It has bounced, and Ace is saying there's been some nice bounces there. There always is nice bounces here, but the trend is your friend. The trend is down in this thing. So I do think, bounces are going to be sold here. This isn't one that I think is going to bounce back here and be 10, 12 bucks here again. I think, this is seriously now under $10. It's never been under $10 before. And not only is it under 10, it's under 9 right now. I just, fad stocks, when the fad fades, that's,
Looking at the pre-market trading here, $9. I mean, pre-market low, the initial spike, that was actually an after-hours low, and that came in at 870. Just hanging out here around 9. Someone's trying to bring some stock in at 9 on the short side here. A couple pops out up to 950. We're short-lived. Dennis, did we lose you?
I'm here.
Oh, okay. You just cut out for a second. Okay.
I'm here. I'm here.
$9.
Whole Foods.
Whole Foods.
Yeah, let's go to Whole Foods, WFM, because this stock was a yo-yo after hours as well. It rallied, came all the way back down, and then it rallied here again. And I will say, and we've been saying about this level, this $28
Wow. Woo.
level has got to be one of the biggest levels that I have ever seen. It is now 2 years of support, because you can see when we initially hit 28.73 back 1 year ago on November 6, 2015, looking at that week. Then you look 28 and a quarter, 28.06, 28.18, 28 in the last little while. We did hit down 27.67, 27.86, 27.91. But we're in a decimal laden world. It's never going to be perfect. Call it $28. This level has just been absolutely enormous. If this thing ever starts trading like below 27, I don't want any part of it. But man, there is some support here. And if you've been buying it off of 28, you have made money a lot of times. And I'm not going to slap you on the hand for doing it again, because it's worked a dozen times before. So, the 28 is support, and support is support until it's broken.
And we were just talking about this stock as opposed to, some of the drug stocks. With this, some of the food stocks. I mean, are people really going to be eating more food? Maybe. Are they going to go to Whole Foods? Maybe. This is compared to the, to the other stocks that we talked about, the drug stocks, supply and, demand, aging population, a little bit different. That's why I don't know. Whole Foods doesn't have a dividend, does it?
Yeah, Whole Foods does actually.
Yeah.
WFM is 1.83% right now.
28
It's a
bucks.
little dividend.
Yeah, $28. Dennis gave you the level on, obviously, the support on that one. And Dennis, how many times do
Before you just change this up, okay, go ahead.
Well, no.
Change this.
Pre-market high is 30.20. Back now, it needs to hold 29. How many times you were talking about a level in GE a couple years ago? You said it hit it like 17 times or something. You made money.
That's going back to when we were first trading, like back to 2000, 2001. I can remember shorting off of like this one level, I think 17 or 18 times. It was day trading, and it went up there like 17 or 18 times. It would go up, and this back when we were in teenies, and I would short it like, I don't know, like one. It was like when G was like $130 stock, and like get up to like the 130 level, and it would sell off a buck. And then it get up to the 130 level and sell off a buck. And then get up to the 130 level and sell off like 60, 80 cents. And get up to the 130 level and sell off another 60, 80 cents. And get up there again. I played that like 16 or 17 times. So, I mean, when you can identify those levels and they hold that many times, once they hold 3, 4, or 5 times, I keep playing it until it doesn't work. I'm like, I've done it this many times. I have to do it again until it doesn't work, because now, who knows? You might just get on that streak that it's going to do it 16, 17, 18 times, and you're going to make a lot of money doing that. So if you played Whole Foods once, twice, 3 times off that 28, I think you keep doing it until it doesn't work. And then eventually it goes out and takes out 27. Like, give yourself a buck, it takes out 27. Then you're out. So, that's how I do it. If you've played it, a few times in the past, I keep playing it until it doesn't work anymore.
All right, 8:34. You want to sneak in one more earnings report here before we bring in on our next
It's
guest?
8:35. We better just go grab our guest, and we'll do a few earnings reports after our guest.
Welcome back, traders and investors, to Benzinga's Pre-Market Prep. I'm Joel Alconin with Dennis Dick, and we have Evan Schneidman on the line, founder and CEO of Prattle. Tell us about Prattle, Evan.
Yeah, we're a text analysis company. Our core product analyzes the content of central bank communications. So every speech, every press release, meeting minutes coming out of 20 central banks around the world, we provide a sentiment score for each one of those communications in real time.
All right. So, yes. Oh, go ahead, Dennis.
I was going to say, how does that work? Like, how do you, I'm always very interested in this. It's kind of like, almost like, is that like machine reading you've got there where they just read it and then they can interpret it and then, quantify it?
Yeah. So, I mean, there's definitely a lot of different sentiment methodologies out there. Most of them are predicated on the same dictionary-based approach. You have an expert build a dictionary of preset terms that rank order from positive to negative, and you just add up all that positive, add up all the negative, subtract the negative from the positive, and call it a score. Our methodology actually works quite differently. So we actually natively build a lexicon based on historical market response to prior communications. So when we look at historical Fed statements, see how the market responded. If the market responded as though that statement was hawkish, we know that future statements that look like that one in a variety of weighted and stratified ways are also likely to be hawkish. We're also able to build in machine learning so we can actually adapt to changes in language, changes in market conditions, and really evolve as language evolves.
All right. So what did you interpret from yesterday's Fed report?
So it's interesting. Every FOMC cycle, we do a statistical projection of what we expect the score to be, and then we also look at what the experts are saying. A lot of experts will write a mock statement. So one of our colleagues, former Fed Board Governor Larry Meyer, always writes a mock statement. And this go-round, Larry's mock statement was significantly more dovish than our statistical projection. Our projection was pretty hawkish. And it actually turned out that the statement looked a little bit more like our statistical projection this go-round. And I think it was hawkish. It was definitely pointing towards a December hike. We normalize our data between -2 and +2. And this statement came out scoring a little bit above a 0.3, which is the most hawkish we've seen in over a year.
How's that trending? So, because obviously, a lot of people say, they're going to raise now for sure, but we've heard this before. Has it, been trending, like they're, looking like they're going to raise, like getting more hawkish here, or is it just kind of been stable? How's that trending compared to, the last time we realized it?
Yeah, so basically since September, we've seen the trend rising. We were certain that September was not going to happen. Trend had actually dipped down a little bit since mid-August, and I'm actually looking at our trend line right now, and it's definitely been rising pretty steadily since mid to late September. And what's really interesting is we're actually now back at levels we haven't seen since December of last year when there was a rate hike. So you add that with the qualitative information we know. Eric Rosengren, president of the Boston Fed, actually dissented at the last meeting, at the September meeting, because he was in favor of a hike. So obviously something was said at this meeting and the language was changed to be sufficiently pointing towards a December hike that he was actually willing to vote with the committee this go-round, which really, really definitely points to a December hike, notwithstanding anything that happens between now and then. And I do think that the election is a possible financial market turmoil instigator in this case.
Evan, is this something you can use, like, when you're looking at, election polls and stuff like that? Is this, software able to, be used on, different things here and, to get a sentiment score on what you think possibly might happen during the election?
So we are not actually actively analyzing communications around the election, although what we are rolling out in the next couple of months here is analyzing corporate communications. So really, in the sweet spot of what you guys typically talk about on the show, analyzing earnings calls, for instance. What's the sentiment of an earnings call in real time? And then every other corporate communication in between as well. So the idea being to be able to track quantitatively what they're saying and how that might diverge from reported numbers from every corporation around the world.
We've been on Oh, go ahead, Dennis. I
was just going to say, has that actually helped, in like that quantitative, how does that compare with, what stock movement is afterwards? I'm just curious, because this is very interesting, when you can talk about, machine reading, and different sentiment scores and figuring out what the crowd is saying. I mean, there's, a lot of, people who are investing a lot of money into stuff like this. And I'm just, I'm still skeptical because I don't know that much about this. I'm just curious, how that does compared to actual results if you're tracking that.
Yeah, so we actually so as I mentioned before, we train a lexicon for each individual central bank based on historical market movement. We do the same thing with the stocks. We actually predicate the lexicon based on how stock prices moved in response to prior communications. And with stock price, it's really nice. We can actually control for other known factors. Did they beat or miss earnings? What's quantitative guidance? What's the industrial sector doing that day? And it allows us to actually provide a really precise metric for what the sentiment of that communication is going to be or what that sentiment of that communication is, and how that's going to affect stock price. And so what's really interesting is we've seen, as we've built out this data set, the large caps, we're quite precise, but the market digests that information so quickly because so many people are paying attention to large caps. But when you start looking at mid and even small caps, you're really talking about very few people analyzing what's being said on those earnings calls. And so being able to watch these things algorithmically actually provides a huge value add. No human being can cover 5,000 publicly traded equities in the U.S.
Evan, you could definitely pass on this question if you prefer to. Bobby Bidd is asking, what's your sentiment on the 2017 outlooks?
So 2017, we don't project out very, very far into 2017, but if trend is looking as it is globally, I should note, I was actually just looking at this morning, we're seeing trends rising from central banks all over the world right now. Japan has stabilized. The ECB trend is rising. Bank of England statements out this morning. Sentiment is up there. Sentiment is up from the Fed. So we're actually seeing some economic strength for the first time in a while. That's pointing to some nice things, hopefully, for 2017, although some of the cyclical seasonality things have come back to bite us in the beginning of the year, pretty much every year for the last 6.
Evan Schneidman, founder and CEO of Prattle. That's Prattle. If you guys want to check that out. Great information. Not something we usually talk about, Evan. We'll have you back on again, perhaps in December when there's a move on the rates.
Great. Thank you, guys.
843, S&P still up 4 points, hanging up near the highs of the session. Got crude giving back a little bit of the gains. Gold and silver deeply in the red.
Just looking, 266 stocks report today. I mean, we're in the heart of earnings season too, but the heart really was last. The major companies have reported. It's a lot of smaller companies here now. So, and obviously we went through some of the major reports. There's still a few, though, interesting reports that I do want to discuss. Most of them from last night. This morning's reports, there's not as many, as Spencer was pointing out even, there's not that many big guns reporting here this morning. But last night we did hear from one of the casino stocks, Wynn Resorts, WYNN, and that stock is trading down 4 points here in the pre-market. Spencer, tell us about the Wynn Resorts.
Wynn didn't really win last night. 75 cents versus 78 cents. Revenues of 1.1 versus 1.12 billion. So a slight miss there on both.
And the stock is trading down 4 points here in the pre-market. I always trade Las Vegas Sands with this one, LVS, just slightly down though. And I'll tell you, it was sympathy. And, sympathy is a funny thing. And, I've made a lot of money over my 17 years in a career trading, stocks and sympathy. Basically when Wynn's trading down, I'd be shorting Las Vegas Sands in sympathy against it. But I'll tell you, in the last 3, 4, 5 months, sympathy has become a really crowded trade. And, and trading strategies cycle. So sometimes they're crowded, sometimes they're not. When they start to get really crowded, and a lot of people are playing the same strategies, they tend to not work as well. And really, sympathy has not been working as well because historically here, Wynn Resorts, when it's down 4 points, you'll see Las Vegas Sands trading down at least $1 or $2. And it's not, and that's, been typical of this environment where I've been playing some sympathy plays and they haven't been working. So I just caution the sympathy trader out there right now because sympathy has been very crowded here as of late. It will work again. These are strategies over the 17 years that go into cycles. When a strategy becomes too crowded, it stops working. Then people stop working or stop using the strategy because it's not working. And then it starts to become less crowded and starts working again. And that strategy cycle is very important, as a trader to be able to identify when a strategy is working and when a strategy is not. It's like momentum strategy has been working here for the last 3, 4 years. You will come into this market again where contrarian strategies work. It's just, a matter of cycling and being able to identify those cycles. And sympathy is one that, gets crowded as well. And I believe we are very crowded in the sympathy trades here right now. And that is why you see them not working as well. You'll see people shorting Las Vegas Sands on the open because that's what's always worked. And then they get run over because it's too crowded and there's not enough liquidity and it starts to move the other way. And I'm not saying that's going to happen here with Las Vegas Sands here today. I'm just saying sympathy has not been working as well as it has in the past. But, when strategies stop working, I don't always just, forget about them and never do them again. I do them with smaller size so that I can monitor them. And then, obviously, when they start working again, then I employ a larger size.
You ever go opposite? You ever go opposite?
You know what? It's so hard to do that because it can work. I mean, when a strategy gets so crowded that actually you're going to blow out the short-term traders, because what trading really is in the short term, it's all about hurting the maximum amount of people. And so when a strategy gets really crowded, or a stock gets really crowded on one side, it flips hard the other way as people tumble and fumble over each other to get out. And liquidity, especially on the opens, is liquidity. We've talked about this in the show before too. Liquidity is very there's just not a lot of liquidity when a stock initially opens. Even you look at a stock like Johnson & Johnson, the first bar in the first 5 minutes of trade, sometimes they'll trade with 10, 15-cent spread. This is J&J, which typically has a 1 cent spread all day. But it's just because there's so much uncertainty at the opening pricing. And it's always been the case. I mean, liquidity has always been lower at the open. But I think it's even more than it used to be, because a lot of your market makers now are high frequency traders. And they have very low profit margins. So they can't employ huge risk. So right off the bat, they're probably hands off a little bit, or they're widening their markets out because they don't want to come in here, trying to make a penny and lose 20 cents. I mean, that's just, the math doesn't add up for that. So they wait for stability to come in, and then they actively make markets a little bit more. But, because we're so dependent on high frequency liquidity, we don't have a lot of other market makers anymore. They're so efficient in what they do. They've pushed them all out. I mean, you just look at the NYSE floor, and it's all computers down there now. It used to be locals, used to be people doing and making the markets, and that's just not the case anymore. The market makers are all high frequency algorithmic market makers, so all similar types of firms running similar types of strategies, which leads us to situations where liquidity can get very low when everybody is running the same strategies, and all of a sudden there's a lot of risk and they're hands off. I mean, that's why flash crashes can happen as well, when everybody backs off their quotes and now there's nobody left quoting because there's no humans. I mean, humans were slower back. If a high frequency system can cancel its quotes in a millisecond, where a human being has to look at a process and move and cancel. It might take them a few seconds. So speed of the quote, a lot of different issues, but basically, long story short, is that with liquidity lower at the open, you see stocks tend to reverse very quickly. So there's a lot more risk at the open, is what I'm saying.
Great point here. Real quick, the analytics here and on win. Pre-market low of 90.50, getting a nice bounce off there. That takes out the former low of the move here. That was down at 91.06. We were above that. I'd give 91.06. Minor support 90.50. Your next level under $90. You do have an area to keep an eye on, but it's not until your August 31st low of 88.50 coming back on the upside. Just keep an eye on 93 here. That's been a bump in the road on the last couple of recoveries, except for that one spike up. So 91 to 93 potential range there in Wynn Resorts.
Our UK trader in the chat, Flack, he wants to know about Tesla, and Tesla has got the beats here. I will tell you, the last week, it's really got hit hard here. And it's funny how these things happen. You get the breakout, which became a fake out when we went all the way to 213, and then boom, 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 boom. 5 trading sessions later, we're back at $188. So, you had the big pop, maybe it was Musk talking up his stock again. I don't know what it was, but you broke out through that key resistance of 205. And when you have a breakout and you're a breakout trader, the whole key is you've got to remain broken out. And when it starts to come back down through the level that it broke out through, that is your key that this might be a failed breakout. And that breakout from 205 up to 213 was good for the day. But longer term, if you're a swing trader, that was a failed breakout, and it's been straight down ever since. And people who bought that and saying, oh, no, it's going to bounce right off the 205, and then it's down to 203, they're like, well, it'll come back to 205. Now it's 200. Now it's 198. Once 195. Now those people are underwater. So when you get traders underwater, now you've created overhead supply here as well, which means any type of rally that the stock gets, I think up near 195 to 200, is going to be met with a ton of sellers here now. So 200 becomes a major, major resistance point. If you get a spike, on Clinton or whatever, I think, Tesla's underwater here. The company's expensive. We talked about that a million times in the past. They're selling expensive companies right now. It's the type of market environment that we're in. They don't want to own stuff like that, and that's why Tesla's getting hit right now.
This is not quite the CMG setup we had at that 380 level where it just kept on bouncing, but very precarious here. You made a low yesterday at 87.51, or excuse me, the low of the move has been 87.51. That was the low. Yeah, that was a low from yesterday. And then going back here in Tesla, you had another low in this area as well. So, I mean, this one, I think you got to be quick when it goes through that major support. I wouldn't like give it back to like 191 though. If I don't get that instant reaction through that 187.50 area, I'm cutting bait and maybe try it again. But it is a major support level. Closed right near it, getting a little bit of a bounce. We'll see what happens. Trading up in the pre-market, but not very much. Real quickly, out of the chat here, someone also asked about DYN. Are we touching this stock? Big reported loss yesterday.
Oh.
I mean, where do you buy? I mean, you do have support here back at this area. I heard that is back in February. But, I mean, this thing, if anything, it's telling you to short it down here instead of buy it.
Well, I don't like shorting stocks that start getting under $10 and they just came from 20 because the risk. How do you control the risk on a short? And that's, always my setup there too, is I always look at the trade and I never look at how much money I can make. I always first look at how much money I can lose. Okay, how am I controlling risk on this? The thing just fell $3 or $4 yesterday, down to $7.34. I mean, I don't know. Like if you're really playing a short, you got to give it to yesterday's high probably, which is way up at 948. Well, that's 20% higher. So I'm sitting talking not from a short term like minute to minute or second to second trader here. I'm talking as a swing trader. I don't know where maybe if you got back up in the nines, maybe you try it, but kind of at 734, who knows? So I think I'm hands off on something like this too.
All right, look at
There's simpler charts out there.
Yeah, definitely. Look for at least some kind of stability, a double or triple bottom. Also, Solar City, if you're following that Solar City, folks, you just got to follow the Tesla and keep an eye on that ratio. That's going to be influencing the stock trading here at 1862. Bobby Bids, CVS. I haven't looked at that stock in quite a long time. Here's another that sells the drugs getting beat up. You got your support here at $82. Let's see what's going on. Not much in the pre-market up here at 84. Now, I say good to go north here as long as you stay above all those lows in the mid-82 handle, 82 and a half. If not, continued downside here, maybe $80 a psychological level. But support well-defined in CVS.
But the big difference here is CVS. Okay, they sell the drugs, but a lot of your drugs are trading with multiples of 6 or 7. CVS forward PE is still 13. So yeah, that's not that expensive here, but you can buy the drugs for half the price of CVS. So why am I going to go buy the place selling the drugs when I can actually buy the drugs at half the price? So that's, just a little bit of fundamental thought analysis from me why, I'm not jumping into CVS right here.
Thoughts on Twilio, and I've been watching this stock for a long time here, and all I could say, it just got killed. Was it nearly $71? Come back, trying to find support here at the $34 area. Sean Udall really likes this stock. It's something that he's been looking at. He thinks there's low expectations for the quarter. But, of course, what could happen? They come out with a good number, but guide lower. So it's always a trick going into earnings. Support here just under $34, but he's looking for a win out of that. ZB.
Before you go on, poster child for this type of market that we're in. They are selling high multiple stocks or stocks that aren't making money yet. They are hitting those the hardest in the last month. And Twilio has been halved, not maybe because of anything that Twilio did, but because of the market environment that we're in. They do not want to own these high multiple stocks right now, or stocks that don't make money. And those are getting hit the hardest. And this TWLO is a poster child for that. So nothing against, Twilio. Maybe they're a great company here, but right now that type of stock is out of favor.
All right, ZBH. Phil was looking to do a little bit more no-brainer after Biomed acquisition, and I guess it was a no-brainer to the short side here, just getting beat. That must have been off. Was that off a drug? I can't remember why this thing took the big hit. Was it drugs or earnings? But not a good-looking chart there, Phil. I mean, you made a new low of the move yesterday. Long-term support, maybe something psychological like $100. 95.44 was your March 31st low. Need some kind of stability, a couple lows in the same area.
It was earnings off CBH. That's why the beats for Zebra Bobby Hotel.
And your favorite stock, Dennis, Starbucks. Are people going to be drinking more? Five.
I've hated Starbucks all the way up, so I've got this one dead wrong. I better stop talking about Starbucks. I'm always wrong on Starbucks, so whatever I say, do the opposite. This is one of those stocks. If there's a stock out there that has your number, don't trade it. And this is, what I used to write a list down, stocks I just seem to do bad on. People revenge trade. I got to get my money back in this. I got to get in this. I'm of the opposite opinion. When you have a stock that simply, you're just good at losing money on, don't trade it anymore. And Starbucks is one that whenever I trade, even short-term trading, and I seem to lose money. So I'm not giving any opinion on this thing, because if I say I'm bearish, it'll probably rally. If I say I'm bullish, it'll probably sell off. So maybe you want that opinion so you can do the opposite.
Major resistance just under 54. Let's call 54 even your major number on the upside. 5-6 highs right in that area. On the downside, you did have a red dog reversal yesterday. So, no, it didn't make a new low. It made a low and then came back. So it held that area. Taking a look at that yesterday.
Does have earnings tonight, too.
Yeah. So 53.46. Keep an eye on that. Little position squaring. Just not good that, you've been trading in this range here between 53 and 54 for a little over 2 months. And now you broke out of the bottom of the range. So technically needs to get back and hold 53. Closed at 52.98 yesterday. Dennis, any closing thoughts here before we end the show?
Just again, we're getting a little bit of a pop here, but like I said, I think there's going to be a tendency for institutional money managers to sell the pops at least for the next 4 days. So I'm not chasing any rallies until we find out who the next president is going to be. And I think you could see some downward pressure in the market the next few days continued again.
All right, Spencer, you want to preview our final show of the week?
Tomorrow we got Bill Corcoran and Tracy Reiniak, 2 guests tomorrow. So we'll also be discussing those Starbucks earnings, as you mentioned, in our final show of the week. If you missed any part of our show today, you can catch the whole thing right after the show ends, actually unedited, on YouTube on the Benzinga YouTube channel. If you want to wait for the edited podcast, you can catch that on SoundCloud, iTunes, and Stitcher. Just search for Benzinga or PreMarket. Also, don't forget about Benzinga Pro. It's Benzinga's real-time news platform. That's great for anybody looking to stay on top of what's going on in the markets. With Benzinga Pro, you get our market moving exclusive feed, audio squawk, and real-time SEC filings, as well as all the biggest headlines from across Wall Street. And it's priced just for retail investors. To get a free 2-week trial today, go to pro.benzinga.com. You can also email me, Spencer Israel, at benzinga.com. You can also call us 313-723-2000. Please remember that all the information, material, and content from our show is for informational purposes only and not meant to be investing advice. So that's it for us today. Hope everybody has had a good pre-market so far. Hope you all have a good rest of your day, trading and otherwise. Congratulations to all our listeners in Chicago. Hope you are celebrating today, and we will be back with you folks tomorrow.
Whether you're a short-term swing trader or a long-term investor, you need to check out Thinkorswim, brought to you by TD Ameritrade. There's a reason why Thinkorswim has been named the #1 trading platform, because it has it all. With Thinkorswim, you can trade stocks, options, futures, forex, and virtually every other type of order. Get notifications on mobile devices and interact with other traders in chat rooms. You can also use technical indicators and see the latest investing and trading education in Think Money magazine. If you want to keep up with the markets, you need Thinkorswim. To experience everything Thinkorswim has to offer, open a TD Ameritrade account today. Thinkorswim, the online trading platform for traders and investors. TD Ameritrade, member SIPC. All investing involves risks.